Okay, let me cover the QQQ and the biotech index here on this run. Okay, here's the biotech index, and as we can clearly see, we had a definitive bottom on this here on the 17th of July. If you go search and pull up my video cast from that time, I would have shown this pattern and have shown you what the inverse right hand shoulder and all that stuff looks like. Now, this move on the biotech index is a tremendously powerful move. This on the heels of M&A, drug approvals, you name it, all kinds of stuff that's going on the biotech side with the smaller and the bigger pharmas. Okay, so at this point in time, I believe that we need to consolidate. That's just my opinion. 264, and then we move up from there, because this is an unsustainable rate that it's moving in right now. This is happening, like I repeat again, because institutional shorts are getting completely decimated. And this generally connotates where these guys have just they're just throwing in the towel and saying, you know what, this market definitely has a lot of juice, and let's get out of harm's way right now. And that's exactly what's going on. So at this point in time, I expect this to possibly continue higher. Let's look at the weekly chart, and if you look at the weekly chart, this is definitively a constructive pattern. Now, I don't have the internal shown on these simple charts here on the candlesticks that I'm showing tonight, just so you look at the just overall price and volume type of thing. But you can clearly see that, let me get my drawing tool, that we have a nice cup, created a handle, and now we're moving. Now, if it takes out, I believe we make new highs on this. Okay, it's just very likely that it happens, and possibly happens by the first week in September. I still believe that sometime in mid-September we're going to have a very sharp correction. September generally and October are very tricky months, but again, there is no seasonal factor going on. Nowadays, with the advent of high-frequency trading and algorithmic programs, a lot of things have been turned upside down. So, just the way it is. That's the IBB for you. All right, we have a bunch of stocks that we play within that sector. As we all know, the VRXs, the PCYCs, the ATHNs, Regenerons, Gilead Sciences, all that type of companies, and they're all in there. Okay, very powerful, doing well. Let's take a look at the RVX. I'm sorry, that's my dogs. Let's take a look at the RVX and see what's going on. Now, this is a very, very important. This is a very, very important chart for short-term scalpers, where we can get 30, 40, 50, 100% returns on fast moves on the Russell 2000. I want people to really understand what's going on. I'll try to be as helpful as possible, but keep in mind these are fast-moving markets, and I try as quickly as possible to put these charts up. But sometimes when I'm trading, as I know I'm a real trader here, not just not just doing the subscription service, then obviously it gets delayed by a couple of minutes, and things can happen in a couple of minutes. So keep an eye on this. Now, what do I see here? I put this chart up earlier today, but this is clearer. We have a very large falling wedge. We have a floor, extreme low on this at about 1575. We got there. We bounced very hard, and this was on Friday. We hit the top. Look how just how mechanical this is. It tests the downtrend line from all the way up here, tests the downtrend line, comes crashing down, and now this is a consolidated pattern, which tells me that it wants to get up towards, let me get the drawing tool if I can do this. This is again a tight falling wedge within a large falling wedge. Okay, so you can do this one here too. See? Look, broke out. Falling wedges generally do break out. You can look at it here. Look at that. All right. So just the way rising wedges break down. So so here we are. I think it gets towards 1750 or so, a point. If it really blasts loose, then the best we can see, in which case there will be a sharp correction, a 200 point type of correction in the market, which would be fantastic for put holders. It goes to 1950. If it moves 3 points from 1650, you can bet that those weekly puts whether it be this week or next week, are going to literally triple or quadruple fast. Now, how can that happen? Different things, technicals, external global factors. There's a bunch of things that I forgot to mention today. For example, number one, these things are not getting reported because somewhere in there they're trying to keep the market calm and everything. We had Israel pull out of the talks in Cairo, so fighting's going to resume again. We have this Ferguson situation going out of control. We have markets severely overbought. We have the Ukraine situation somewhat calm, but we don't know what exactly is going on the ground. But neither we'll ever know. So we have a bunch of these things going on here. Plus, we have a market very overextended and coming into the middle part of the month, which generally is a more corrective phase before we start the month and window dressing shenanigans, which I have very effectively played, as you all know, and that is certainly going to happen this month, in my opinion. So, removing all the stuff here, you can see that I believe that we have a short-term opportunity, very short opportunity, to make some real decent money on these puts. I am generally not an aggressive buyer on markets when RVX and VIX gets down to these levels. Okay, let me show the VIX here, and this is for the Russell 2000. If we do a little Fibonacci placement on top of this, okay, if we do this, let's show you where it can go. A 50% retracement of this massive move from 24 down to 15 tells us that it gets towards this level that I just drew the line, which is around 1930. So, best case scenario, we go to 1930. These puts would basically triple or more. So, just keep that in mind. Let's put the VIX on top of this. Okay, the VIX, a similar type of situation is brewing here. Okay, so I can draw this. This is what happened on Friday. This is a large falling wedge, if you want to look at it that way. Let me see here. Like that, okay? And at this point, the VIX is extremely low. And it can certainly go lower. I mean, the VIX could go below, it can literally... I'm drawing this for everyone to see. Hopefully I'm not running out of time. No, okay. So, there. Okay, so what do we see? We have a large falling wedge, and we have a tight one in between. Okay, so at this point in time, get the drawing tool out. VIX could get to about 13 plus. Again, 1475, I believe, would be the 50% retracement of the big move from 17 down to 10. So 17 down to 10. That's 7 points, 50% retracement is 3.5, that's around 13.5 or so. Let me actually just do this so we can see exactly what the 50% retracement is. As you know, these Fibonacci retracements do work, shown this repeatedly. So 50% retracement on this is around 14.11. So the VIX could very well get up there. And honestly, if you look at the pattern symmetry, this is where the VIX fell apart. This is where the VIX fell apart here on a short-term basis. So this could very well do this. And we've yet to see. First move is going to be here, possibly comes down a little bit, and then moves up. So we have a little bit of turbulence coming ahead of us. So let's not get too aggressive with all the longs. There are select issues that we're playing with doing really well. We have the ISRGs of the world. We have the VRXs. You can scalp the Netflixes. Apple's doing well. Google's pretty strong. But again, when market gets like this, just sit back a little bit. Don't force a trade. Look for an edge and react fast. I'll try to help as much as possible. GoPro, huge winner. Okay, so that's what's going on. Let me just quickly, while I have about 30 seconds or so, show you the 10-year yield. The 10-year yield has a definitive hammer bottom. Okay, hammer reversal right here. So the hammer reversal was off 2.3%. Okay, 2.3%, and now it looks like it wants to go back and go towards the 2.5%. All right, 2.5% move. So again, this is something to keep in mind, that interest rates will be on the rise again, and that could be a slightly negative effect on the small caps, which generally tend to benefit tremendously when rates just collapse, like it did. So again, we have 2.5 to 2.575% that I'm looking at purely from a technical basis on the 10-year government bond yield over the next couple of days. So that's something to keep in mind. Okay, this is a hammer reversal. We're in there, and this thing looks like it does want to, head this way. So again, just keep that in mind. Rising interest rates